Hello and assalamu alaikum, and welcome to this second day of the Prepare to Pass exam session for the paper F6 Taxation Pakistan variant. I am Luqman Rafiq, and I am the tutor for this specific webinar which is being conducted. For those of you who have actually joined in today only, so this is basically a webinar that's being conducted for the paper Taxation, the Pakistan variant. And I did mention earlier also that I have conducted a session in the previous session also, which is the September 2019 exam session. And during September 2019, I have attempted the various aspects of the syllabus, so I did actually go through that aspect also. So what we actually did in yesterday's session, I'm going to have a quick recall of what we did in yesterday's session. Basically, in our yesterday's session, we had a review of the syllabus of this Taxation Pakistan variant. And once we had a review of this syllabus, so the next thing that we actually did was we actually started doing sales tax. And when we talked about the sales tax, so I actually gave an introduction of sales tax, that what exactly is sales tax. Okay, so I actually gave an introduction of what exactly is the sales tax. So we did discuss that the sales tax is also referred to as general sales tax, or the value added tax, or the multi-stage tax. And then what we did was we moved forward and we talked about the terminologies which are there with respect to the sales tax, which includes the input tax, the output tax, and the sales tax liability. Then we moved a bit forward and then I talked about the overall operational dynamics of how sales tax operates. So we talked about the concept of manufacturer, then we talked about the concept of distributor, the wholesaler, and the retailer, and then the consumer. So we talked about how a manufacturer operates, what is manufacturer's input tax, what is manufacturer's output tax. We talked about the concept of distributors input and the output tax and so on and so forth. So we had all these discussions. The next thing that we actually did was basically we talked about the concept of other terminologies, and that was the intrinsic value and the inclusive value and the exclusive value. So we talked about that the inclusive value whenever we have a question where it says that the inclusive value of sales tax. So what does the inclusive value mean? And it means that the sales tax is included. And when we talk about the exclusive value, it means the sales tax is excluded. Then we moved a bit forward. We talked about the concept of registered and unregistered person. I talked about this specific concept, that the registered person for the sales tax actually means a person who is registered for sales tax, a person who is registered for sales tax. And when we talk about the unregistered person, what does the unregistered person means? A person who is not registered for the purposes of sales tax. So that's what we had a discussion. Then we talked about that if somebody is registered for sales tax, then what happens is he is eligible to charge sales tax on the supplies that he makes, and also the input tax that he or she pays. That can be adjusted or that can be refunded. We talked about another concept, and that was basically how the input tax is computed. I had a sample calculation for the computation of input tax. I talked about the income tax computation as I gave few examples like purchases from registered person, purchases from unregistered person, import of goods, and so on and so forth. Then we moved a bit forward, and then the next thing that we actually talked about was basically how the output tax is computed. When we talked about the concept of output tax, so with the output tax, what we actually did was we had a sample calculation of output tax, that how output tax computations actually go about. Then we talked about the sales tax liability computation. So that's all we did. Then I moved a bit forward and I talked about the various types of supplies. I did discuss that the various type of supplies, they include a taxable supply. What is a taxable supply? It means a supply which is made by an importer, a manufacturer, wholesaler, dealer, distributor, or retailer. Now, very important point is there is nothing mentioned as a banker. A banker, when he makes a supply, it's not considered as a supply because the banker may not actually fall under any of these headings of importer, manufacturer, wholesaler, distributor, or retailer. Furthermore, we talked about the concept of exempt supply. We discussed that the exempt supply actually means those supplies which are mentioned in the sixth schedule. Then we talked about the concept of zero rated, and we talked about that the zero rated actually means the supplies which are taxed at 0%. I did discuss the concept, the basic difference between the exempt and the zero rated supplies. And I said that when we talk about the exempt supply, that means the sales tax won't be applicable on them. And when we talk about the zero rated supply, the zero rated supply actually means that the sales tax will be applicable, but it will be applicable at a rate of 0%. So that's what we did. Then we moved a bit forward, then we talked further. We discussed about that what is actually what falls under the zero rating. So I did discuss that goods that are exported or the goods that are listed in the fifth schedule, or there is actually a supply of stores and provision for any conveyance which is proceeding to destination outside Pakistan. Then we talked about the other situation, that the goods which have been exported but have been exported for the intention of re-import into Pakistan, then basically what would happen is the zero rating would not apply to them. Similarly, goods which are registered for export, which are basically registered with the authorities for export but have not been exported, they will also not be subject to 0%. The other thing that we talked about was basically such other goods that the federal government identifies. I discussed that there are further supplies, which is one of them is a reduced rate supply. What exactly is a reduced rate supply? So I talked about it that the reduced rate supply means the normal general sales tax rate in Pakistan is 17%. But if there are few supplies on which the government has prescribed a lower rate, so whatever the lower rate that's been prescribed, that's called a reduced rate supply. Okay, then we move forward. And the next thing that we actually talked about was the concept of third schedule item. I did discuss that what is a third schedule item. So when I talked about the third schedule, I mentioned that third schedule items are those items on which the government has prescribed that um, the sales tax will be charged from the manufacturer on the ultimate retail price, irrespective of whatever price the manufacturer is going to sell those goods to the irrespective of whatever the manufacturer is going to sell these goods to the distributor or the wholesaler and so on and so forth. The manufacturer will be liable to pay sales tax on the ultimate selling price. So that is what we did discuss. So we actually move forward, and then we move towards several definitions. And the definitions that we did discuss was, I talked about the various important definitions pertaining to the um, sales tax. The first and the foremost definition was about the supply. And I talked about the supply, and I did discuss that when we talk about the concept of supply, so a supply would actually be like whenever you sell something or you transfer the right to dispose of the goods to somebody else, that means you have made a supply. So we did talk about it that when we talk about the concept of supply, so it's actually like putting to private or the business use. And similarly, we did discuss that it could actually be um, okay, so we did discuss that putting to private business use or basically auction by somebody who is actually satisfying the debt owed by a person. So like if we have actually mortgage something, some goods to our bank, and the bank actually sells those goods. Uh, okay, if the bank actually sells those goods, so that is actually going to be considered as if the supply has been made by the person. So we did talk about it, and the next thing that we did discuss was um, that when we talked about it, so basically what we did discuss was the concept of taxable goods, and we did discuss that what do we mean by goods. So it includes every kind of movable property other than actionable claims. I did talk about the actionable claims to be coupons and so on and so on and so forth. And then we talked about the concept of value of supply. So the overall crux of the value of the supply was that the value of supply is going to be the price, which is the open market price, even if you receive the consideration in kind. Then we talked about the concept of time of supply. So if I talk about the concept of time of supply is basically when we say that whenever we talk about the concept of time of supply, so time of supply actually refers to the time at which the sale is going to be considered, because we file a sales tax return on a monthly basis. So if we file sales tax return on a monthly basis, then what happens is you need to have an idea that what is actually going to happen. So basically it was like when the date when the goods are delivered or made available, or the date when the payment is received, whichever is earlier, that is considered to be the time of supply. This is all that we discussed. And then what we did was we moved to a question that was basically a question of December 2018 of the ACCA F6 taxation examination. We talked about question number 4, and we attempted that specific question number 4. I'm now going to move forward, and I'm now going to discuss the other questions. So basically, if you go to the this webinar window, so you'll find that in the handout section, you'll find basically this file named practice question day 2. You'll find this file named practice question day 2. Okay, so has everyone got it? Has everyone got it? Okay, so Zishan Abdul Rahman, you're asking a question. Should further tax be collected from unregistered person on sale of third schedule items by importer? Okay. Now, when we talk about this third schedule items, so basically what happens is there is an SRO which specifically prescribes that there are few items on which the further tax is not applicable, and the third schedule item, basically if they are being sold to consumer, then the third schedule item, if they are being sold to consumer, then no further tax is applicable on it. Now let's actually talk about it. There is this question which says in each of the following cases. I hope that everyone has got the question. I'm going to guide you that this question is basically June 2018. This is a June 2018 exam question, question number 4 of June 2018. Now let's see, let's talk. It says in each of the following cases, specify the documents necessary for sales tax registered person to be entitled to deduct input tax. A taxable supply of goods, goods imported into Pakistan, and the goods purchased in an auction. Now, let's try to have an understanding that what exactly do we mean by this. First of all, let's try to understand. It says in each of the following cases, specify the documents necessary for a sales tax registered person to be entitled to deduct input tax. A very important point of law. First of all, if you are actually a registered person, first thing that you need to understand is, if you are a registered person, then being a registered person, what is going to happen? Being a registered person, you will obviously be claiming input against your purchases. Now, if you will be claiming input against your purchases, so in order to claim input, certain requirements are to be fulfilled. Certain requirements are to be fulfilled before the input tax can be claimed. So in order to claim input tax, you need to fulfill certain requirements. If you don't fulfill those requirements, you will not be able to claim input. So basically, the first requirement of this question is, in each of the following cases, specify the documents necessary for a sales tax registered person to be entitled to deduct input tax. Now, so as I mentioned that if you want to claim input tax against your purchases, then certain requirements are to be fulfilled before input can be claimed. Now, what are those what are those documents that are needed in order to claim the input tax? Now, let's try to understand. When we talk about this specific concept, what is this concept? This specific concept where the taxable supply of goods. So there should actually be an invoice on which the customer's name, at the same time sales tax registration number, should be available in order to claim the input. So if you want to claim input, you should have a sales tax invoice on which your name is mentioned and on which your sales tax registration number is mentioned. Then you can claim input. The second thing is that if the goods are imported into Pakistan, then instead of invoice, you need a bill of entry. You need a bill of entry, or basically a goods declaration, which is generally submitted to custom authority, and that should also have your name, and that should also have your sales tax registration number. So it's important that if you want to claim input, so you can't just claim the input like that. In order to claim the input, you need to actually fulfill certain conditions. If those conditions are going to be fulfilled, then you can claim the input, otherwise you cannot claim the input. So what are those conditions? If it's a local purchase, the invoice should be there. Your name and your sales tax registration number should be there in the invoice. If the goods are imported into Pakistan, the bill of entry or the goods declaration with your name and sales tax registration number should be available. Then you can claim input. The third thing is goods purchased in an auction. When you purchase goods in an auction, so what happens is you need to submit a challan to the government with respect to whatever the sales tax that is there. So a challan should actually be there showing your name / sales tax registration number. So remember your identity, that it's actually your purchase, your identity that it's a valid input tax that you can claim, would only be confirmed when you will be holding an invoice, or when you will be holding a bill of entry, or when you will be holding a treasury challan, and all of them should have your name and all of them should have your sales tax registration number. Then you can actually claim the input, otherwise you cannot claim input. Now let's move a bit forward and let's try to understand the second part. Now it says, for this part of the question, you should assume that today's date is 7th of June 2018. Okay. And it says that calculate the sales tax payable by Umar Limited with its sales tax return for the month of May 18. So one thing we are going to do is we are going to discuss that in our next sessions. But let's just understand that if you are filing the sales tax return for May, You have got time till 15th of June. You have got time till 15th of June to file your sales tax return. Every person is required to file the sales tax return on a monthly basis. So like if you are doing it, so you need to file the sales tax return accordingly. Now let's move a bit forward. So I would want you people to go through the question so that we could have a idea that how to actually go about it. Just go through the question and then I'll discuss further. Okay, let's have a discussion about this specific question. It says Umar Limited is engaged in the manufacture and supply of goods. The company's business transactions for the month of May 18 are summarized as follows. So the business transactions for the month of May 18 are summarized as follows. What I am actually going to do is that if I have certain points, I will keep on mentioning or writing down those points here so that we could have the key information, or we could have the key points here. So I'll keep on writing down the main points. Now let's try to see this. It says that purchases of raw material used in making of taxable supplies, payments for which were made as follows. Number one, the cash payment into the business bank account of the supplier, 3.2 million. The cash payment into the business bank account of the supplier. Now let's try to understand that how are things going to operate. Remember one thing, that as per the Sales Tax Act, since our government wants to document the economy, if any purchases are made for which payment is not made through company's bank account, then input on such purchases shall be disallowed. So remember, if you want to claim input, it's important that you make payment through your bank account, and that too the business bank account. that too the business bank account. Okay, Sarah, you are asking a question. Can this webinar be of help in preparation of my ACCA taxation exam for UK tax? Well, unfortunately, no. The reason behind that is this: in this, I will specifically be discussing the Pakistani tax laws. So you will find it a bit difficult. That unfortunately, you might not be able to go through it in a proper manner. So my suggestion is, rather than this, you try some UK taxation webinar from the ACCA resources available online. That would be much better for you rather than understanding this. Yeah, but if you are attempting Pakistan variant, then that's fine. Otherwise, no. Okay. the next situation is so we are going to talk about this. So basically what would happen is the input tax on this will not be allowed. Let's move forward. It says credit card payment verifiable from the bank statements of Omar Limited and the supplier. So if there are payments which are made through credit cards, since they are verifiable from the company's bank statement, then that's fine, because ultimately you made payment into the credit card through your company's bank account. Now next it says the online transfer of funds from the business bank account of Omar Limited to the suppliers, to the business bank account of the supplier. Okay, that is also going to be claimable, because you are now making payment from your bank account into the supplier's bank account, and that too is a business bank account. The third thing is, it says cross check from the personal bank account of a director of Omar Limited, fully verifiable. Unfortunately, you cannot claim input against this. As I mentioned here, if purchases are made for which payment is not made through company's bank account, then input on such purchases shall be disallowed. So basically what happens is, furthermore, any purchases paid in cash, input on such purchases will also be disallowed. So this is an important aspect which you need to understand, that if you make purchases in cash, or if you make purchases for which the payment is not made through the company's bank account, then the input tax will be disallowed. Let's move forward. The next thing is, it says purchase of raw materials used exclusively in the making of exempt supplies. So if you could remember what we did discuss in the yesterday's session, that the input tax pertaining to exempt supply is not claimable. So basically what is going to happen is, since this is an exclusive purchase, the input tax which is being paid will be disallowed. Further, it says purchase of raw materials used exclusively in the making of zero rated supplies. Purchases of raw material used in the making of exclusively the zero rated supplies. Now, when we talk about the raw material which is going to be used in the making of zero rated supply, so what is actually going to happen to with this? You will be allowed to claim the input. Now remember one thing. What happens is, if you have purchased something, um, the input tax pertaining to zero rated supplies is adjustable slash refundable. Now, a lot of people actually mix it up, that when we talk about the input tax on zero rated supplies, so a lot of people, what they think is that this zero rating is basically leads to an refundable of the company. So remember, zero rating does not always mean export. If you have exported the goods, then you can claim the refund, but if you have not, if you have just sold it, you can claim an adjustment. The next situation is, it says sales of zero rated goods to registered persons. So when the zero rated goods are being sold, the tax is imposed at 0%. Then the next thing what it does is, it says that sales of exempt goods to unregistered person, no tax is applicable on it. It says sales of taxable goods to unregistered person, 6 million. So when you sell the goods to unregistered person, you apply a further tax of 3%. We did discuss this in the yesterday's session also, but I'm just going to write down. And what is this going to happen? It's going to be like that if in case if the sales are made to unregistered person, then a further tax of 3% is charged from them. For if sales are made to unregistered consumers, if sales are made to unregistered consumer, then further tax is not imposed. So if the sales are made to unregistered consumers, then the further tax is not imposed. Let's move a bit forward. Let's talk about that. Now it says sales of taxable goods to unregistered person. Now lastly, it says advance payment received in May 18 for supply of taxable goods to registered person made in August 18. Remember one thing we did discuss yesterday, that when we talk about the time of supply is earlier of date when goods are either delivered or made available or payment is received. So it's basically the earlier of date when goods are either delivered or made available or payment is received. That's what is considered to be the time of supply. So here, if you have received an advance, the advance would actually mean that the supply has been made to us. So if the advance would actually mean the supply has been made to us. Next, it says all payments for purchases were made to registered persons and are inclusive of sales tax at the rate of 17%. All figures for sales and advance payment are stated exclusive of sales tax. So there are few inclusive values and there are few exclusive values. You have got few inclusive values and you have got few exclusive values. Now let's try to understand that how would we go about with the things. So basically, if I talk about it, I'm going to say that in the yesterday's session, I also discussed about this thing, that this is how we are going to do the workings for this sales tax. Now, this is basically, yesterday was December 18. Now it's actually June 18 exam question. Okay, what I'm going to do is that I'm going to do the calculations one by one, so that you people can have a good idea about how things are going to move. It's just the format that I'm using. It's not something that will be applicable to you people also. It's just that something that the format that I am using. So let's talk and let's discuss about it, that how the things are going to operate. Now, so what I'm going to do is that I'm going to operate one by one so that you could have a good idea about how things are moving. First of all, the first thing to do is about the input tax. Now remember, the values that are mentioned here are the inclusive values for the purchases, and they are the exclusive values for the sales that are being made. Now, first of all, it says that purchases of raw material used in the making of taxable supplies, payments for which were made as follows. First of all, it says cash payment into business bank account of supplier. Now, I'll just mention the remarks over here also. The cash purchases from supplier 3.2 million is what we purchase. And unfortunately, the input not allowed. Why? Because of cash payment. So because of cash payment, the input will not be allowed. The next thing is the purchases through credit card. Purchases through credit card. When we talk about the purchases through credit card, it's 585,000, and we are being told that the sales tax rate is this 17%, but this is not how we are going to go about. We are going to say that the sales tax value is going to be this divided by 1 plus because this is an inclusive value, like this is 117%. So if this is 117%, so we need to calculate 17%. So what have I done? I have simply treated it like this. I have said that this 585,000 is basically 117%. So X is 17%. This is what I have done. Since this is an inclusive value, so the inclusive value would mean that this is how you'll deal with it. How? You would say 585,000 is 117%, and in order to calculate the sales tax, this is what we are going to do. Now, the next thing is, it says online transfer for purchases through business bank account. So the online transfer through business bank account will also be allowed, 468,000. The sales tax rate is 17%. The next thing is, it says that cross check from personal account. The amount that is applicable is 819,000. So we would say that input not allowed. Why? Because business bank account is not used. Business bank account is not used. So the input will not be allowed because the business bank account is not used. Now let's move forward. Um, um, there is a WhatsApp group link that's being posted in the window. You people can join that WhatsApp group so that you can ask more and more questions whenever you have got those questions. The next situation that we need to talk about is basically, it says the purchases of raw material used exclusively in making of exempt supplies. So the input will be disallowed of 1.2 million. Is that how it is? Okay. So we'd say that purchases of raw material, purchases of raw material for exempt supplies. Now, what is this purchases of raw material for exempt supply? It's going to be 1.2 million. And the sales tax rate, whatever that you are paid, the input not allowed as used for exempt supplies. The input is not allowed as it is used for exempt supplies. Now what next is here? The next situation is, it says purchases of raw material used exclusively in the making of zero rated supplies. So that was basically, in fact, this was 1.2 million. This is 1755,000. 1755,000. So purchases of raw material for zero rated supply. There is going to be an input and that input tax will be claimed. So we'll have this specific thing, this formula, which is going to be applicable here. The next situation is, okay, so we are done with all the purchases. So resultingly, you would say that what is the total amount of input tax? The total amount of input tax is going to be 408,000. So that's a total input tax. That's a total input tax. Now, let's move a bit forward. Let's talk further. So we've got total input tax. That is what we have got. Okay, now let's move forward. Now let's talk about the output tax. So if I'm going to talk about the output tax, how are things going to operate with respect to the output tax? So let's try to have a discussion. If I talk about the output tax, let's try to understand. When we talk about the output tax, the first thing that we have is it's a sale of zero rated goods to registered person, 4.7 million. Zero rated sales. Zero rated sales. So this is basically 4.7 million is 0%. Now, the next thing that we have is we have got exempt sales. We have got exempt sales. Now, when we have got exempt sales, is basically what? It's going to be 5 million. And there's going to be no sales tax applicable. I'm not even mentioning zero here because no sales tax is applicable on it. Then it says sales of taxable goods. So what have we done? We have talked about the exempt. We have talked about the zero rated. It says sales of taxable goods to unregistered person. Unregistered person. So the unregistered persons, how much amount of purchases are they making? It's 6 million. You've got 17% onto it. So you've got 17% onto it. Now what next, sister? There's going to be further tax applicable on it. Further tax on unregistered sales. That's going to be the 6 million and it's going to be 3% applicable on it. Now, there is this advance payment. So we did discuss that advance payment are being treated as sales. So the advance payment is of 2.5 million. How much is the advance payment? It's of 2.5 million. There's going to be a sales tax applicable on it of 17%. So this is what we are going to get. Resultingly, it is how it is. And then total output tax, and then output plus further tax. You will get Okay, now, so if I talk about the sales tax liability now, so the sales tax liability will be computed like this. Let's try to understand that how the sales tax liability will be computed. So in order to compute the sales tax liability, what is actually going to happen is we're going to say that if you want to calculate sales tax liability, the first thing is we need to have the output tax. And how much is the output tax? It's 1,445,000. There is this 90% of the output, which is 1.3 million, and then you've got input tax. The input tax you've got is 408,000. So how does it all goes about? It's actually adjustable input tax, then it's 90% of output and the input, whichever is lower. So whichever is lower amongst them, whichever amount is lower amongst them, so that amount is considered as a deduction from the output tax. And then you add the further tax to it. What is the amount of further tax here? This one. So the balance tax payable is basically 1,217,000. How much is it going to be? 1,217,000. So is it okay to everyone? Anyone has any questions pertaining to it? In case if you have any questions, please do ask. What I'm going to do is that I'm going to minimize it a bit, zoom it out so that you can have a better understanding and a better idea. Please kindly review it, then we can have a discussion. Yeah, anyone has any questions? Please, in case if you have got any question, do ask so that I could have an idea that if you are getting to understand this whole or not. Okay, any question? I'm asking for the last time, then I'm going to move forward. Any question, please do ask. Otherwise, I'm going to move forward. Okay, so that's great. I think nobody has any inquiries with respect to it. So what I'm going to do is I'm now going to move forward. And so we are actually done with this question, which is June 18, question number 4. So we're done with it. Now let's move forward. Let's talk a bit further. So we now have question number 4. We now have question number 4, and this question is actually a question from I think it's from December 2017. December 2017. Just let me confirm to it just once. Yes, it's from December 2017, probably attempt of the ACCA again. So this is there mentioned in the handout that you have. Basically, you can download it from the handout section in the webinar window, and you can get access to this question. So kindly go through this question. Kindly go through this question first, and then we can have a discussion that how to go about with this question. So this is a question named Badar. This is a question named Badar. Kindly go through it so that we can have a discussion. I'll give you 5 minutes reading time. So it's a 5 minutes reading time till 9 p.m. Kindly read it so that we can then move forward. Okay, so let's just start discussing about this question. It basically is a question named Badar. It says Badar is a registered person under the Sales Tax Act 1990 and is engaged in the business of the manufacture and supply of goods chargeable to sales tax at the standard rate of 17%. His business transactions for the month of February 17 were as follows. It says sales including the exports exclusive of sales tax is what? The local supplies to unregistered person. You know, when we supply to the local unregistered person, we are going to impose a further tax on it also. Um, the next thing it says is basically local supplies to registered person. Then it says local supplies to diplomats in Islamabad covered under 5th schedule. So if you could remember from our earlier discussion also that the goods mentioned in 5th schedule are subject to sales tax at 0%, are subject to sales tax at 0%. Now what next is there? The next situation is, it says exports to Dubai with an intention of re-importing the same to Pakistan by a registered person. So if you could remember, we did discuss in yesterday's session also the goods exported with an intention to re-import, goods exported with an intention to re-import are not subject to zero rating, are not subject to zero rating. So if you are exporting the goods with an intention of re-importing, then such goods will not be subject to zero rating. So that's what is there with respect to the sales. Now the next situation is, it says payments for raw material purchases inclusive of sales tax. So the purchase values are inclusive made to the following registered persons. It says to Manahil in cash, so the cash payment will be disallowed. To Zahid through a cross check drawn on a personal bank account of Badr fully verifiable, unfortunately this will also be disallowed. It says to Nazir through an online payment from the business account of Badr to the business account of Nazir, verifiable, okay. Electricity bill of 600,000 paid in cash, okay, electricity bill can be paid in cash. Otherwise, the other purchases through the suppliers cannot be paid in cash, but the electricity bill can be paid in cash. Included sales tax amount of 114,000. Further, it says an amount of 1053 inclusive of sales tax due to Elias, a supplier of raw material, was outstanding for 181 days on 1st Feb. Was outstanding on 1st Feb. Badar has already claimed the amount of input tax as per the sales tax invoice issued by Elias. So the sales tax invoice was issued by Elias and Badar has claimed input tax relating to it. Now, you need to understand that there is actually a concept, and what exactly is this concept, which is basically that if liability for the goods purchase is not settled within 180 days, then the input tax on such purchases shall be disallowed. Then input tax on such purchases shall be disallowed. So if there is a liability which has not been settled, within 180 days, then whatever the input tax on such purchase, that input tax will be disallowed. So this is what it is going to be. So this input tax will be disallowed because it's been more than 180 days since we have not made payment. It says explain what is meant by a business bank account under the Sales Tax Act 1990. So when we talk about the business bank account, this actually means this is one of those business bank account which is used for business transaction, which is used for business transaction. And in addition to this, it's actually declared to the commissioner. It's actually declared to commissioner upon registration. It's declared to commissioner upon registration. So when I talk about the business bank account, it's declared to the commissioner upon registration. That's what it is. So it says what is meant by business bank account under Sales Tax Act 1990. So it means account which is used for business transaction and declared to commissioner upon registration. Now, also it says compute the sales tax payable by Padar with his sales tax return for the month of February 2017. So we are now going to talk about this whole. Um, I'm going to use the same format that we did. Um, so says move a copy, create a copy. So it's December 2017 question. The name of the question is Badar. What is the name of the question? The name of the question is Badar. Um, if I talk about this question, Badar, first of all, it says local supplies to unregistered. Okay, the first thing we have is the details of the output tax. Okay, let's talk. It says local supplies to unregistered person. Supplies to unregistered person. Local supply to unregistered person. The amount of supply is 4 million. The amount of supply is 4 million. And the rate of tax is 17%. So a further tax would be imposed on it at the rate of 3%. It says local supplies to registered persons. To registered person. So when we supply to the registered person, the amount of supply is of 5 million. Amount of supply is of 5 million. Next thing is it says local supply to diplomats in Islamabad covered under 5th schedule. So we would say supply of 5th schedule item. 5th schedule item when they are being supplied. So as we did discuss a bit earlier, that whenever you supply 5th schedule item, they're subject to sales tax at the rate of 0%. The next thing is that it says exports to Dubai. So if the exports are to Dubai for the intention of re-importing, so what will happen is the exports which are of 3 million, you will not be charging it at 0%. Instead, it is going to be charged at 17%. Now let's move forward. Let's discuss further. Okay, so let's move a bit forward and then we need to talk about this is what we have done. The next thing is we need to talk about the input tax. So if we talk about the input tax, so it's actually Manahil in cash, purchases from Manahil. The taxable value of the purchases is 46,800. This is exclusive value, but here the sales tax need not to be applied because it's paid in cash. So the input tax will be disallowed on this specific purchases. Why? Because as per the taxation law, you cannot make payment in cash. Secondly, it says to Zahid through a cross check drawn on personal bank account. Payment made to Zahid. So if the payment is made to Zahid, it's 3510,000. And this is paid through not paid through bank account, not paid through business bank account. The next situation is basically it says to Nazir through an online payment. So if the payment is made to Nazir through online payment, it's actually 8190,000, and this is being paid at the rate of 17%. The next situation is it says electricity bill. The amount of payment for the electricity bill is for 600,000, and this is also inclusive of sales tax. No, there's something wrong with it. The amount of sales tax is mentioned here, and it's 114,000. Further, purchases disallowed, claimed earlier, which is the amount of the purchases was 1053,000, 1053,000, and it was at 17%. So we would say that not settled within 183 days. It's not settled within 183 days. So this is what it is actually going to be, not settled within 183 days. So if I talk about it, we've now got the input, we've now got the output to it. So on the basis of this, we'll calculate the sales tax liability since the formula was already input. First of all, you've got the output tax here. Then there is this 90% of output and the actual input. So whichever is lower, that is adjustable. The further tax is added to it, and then you've got a balance tax payable or refundable, which is of 1,009,000, which is of 1,009,000. So is it okay to everyone? Anyone has any questions with respect to it? Any questions? Anything that you want to ask with respect to this question, please? Okay, that's great. So uh, we've actually completed this another question. We are now going to take a break, and it's going to be break till 9:35 p.m. and then we shall resume at 9:35 p.m. again. If anyone has any questions, you can please ask. Anyone has any questions, you may ask, please. Anyway, so we shall have a short break and then we'll resume further with whatever that we were discussing, which is our objective is to get over with the sales tax computations today so that we can move and discuss further about the other aspects of sales tax tomorrow. Welcome back. So, up till now, what we have done is we have gone through various questions. We are going to continue because, as I discussed, that we will have um, um, we'll have the session where we are actually going to be discussing about the exam questions in today's sessions pertaining to sales tax, and then we'll have a theoretical aspect covered in the tomorrow's session, inshallah. Now let's talk about the next question. This is a question from June 2017 exam session. The name of the question is Nasir. Let's have a discussion. I'm not going to be solving this question. I will be discussing this question only, and I'm going to solve few other questions. Now, if I talk about this question, it says that Nasir is a registered person under the Sales Tax Act 1990 and is engaged in the production of variety of goods. Nasir's business transactions for the month of September 16 were as below. Supply is made to registered person. You know that when we supply to registered person, I'm not going to be solving it. I'm just going to be discussing it. Supply is made to registered person. Yes, 17%. Unregistered person is 17 plus 3%. Exports to Malaysia, 0%. The exempt supplies, no application. It says payments made to unregistered person for the purchase of raw material for the manufacturing of taxable supplies only. This is the taxable, so the input can be claimed here. Made to registered person for the purchase of raw material for the manufacturing of both taxable and exempt supply. Now that's very important. There's a concept which is basically uh, the apportionment of inputs. Now, what exactly do you mean by apportionment of inputs? If the goods purchased are used for taxable and exempt and export related items, then the input tax, on such goods shall be apportioned between each of such supply, each of such supplies on a proportionate basis based on sales value of goods sold. So basically what is going to happen, the apportionment of input, let's try to understand this concept. It says if the goods purchased are used for taxable and exempt supply and export related supply, so if the goods are being used for multiple things, then what actually happens is, if the goods are being used for multiple things, then basically the input tax on such goods shall actually be apportioned. What is actually going to happen? They will actually be apportioned between each of such supplies on a proportionate basis based on sales value of the goods sold, and this is how it is going to happen. So the amount pertaining to the exempt supplies will be lost. The amount pertaining to the export related would be refunded, and the amount pertaining to the um, taxable supplies will actually be adjusted. So basically, here we are being told that the payments made to the registered person for the purchase of raw material for the manufacturing of both taxable and exempt supplies. So what is actually going to happen is the input tax pertaining to this will be apportioned between the taxable and between the exempt supply in a ratio. Um, Figures for all goods are stated exclusive. Okay. Figures for raw materials are stated inclusive. Okay. It says all payments were made through a cross check except for a payment of 100,000 made to a registered person um, in cash to his business account. So this will be disallowed. Goods costing 150 which were otherwise taxable were used by Nasir for his home consumption. So if the goods which are used for home consumption which are taxable, so that is also going to be considered as supply. The reason behind that is if you put something to your own personal use, that is also going to be considered as a supply. So this will also be treated as a supply. So if I talk about it, what I'm actually going to do is that I'm going to mention this thing that the goods, putting goods to personal slash business slash non-business use is considered as supply. So it's considered as supply. It's considered as supply. Okay, so I hope that this is clear to everybody. I mean, do you have any questions here? Do you have any questions pertaining to it, please? The ones who are attending the webinar, I would appreciate if you could just let me know the purpose and the reason for you attending the webinar. Will you be attempting the ACCA Pakistan variant taxation paper, or are you attending it just for the sake of your CPD, or what exactly is the purpose of attending the webinar, so that I could have a good idea and I could actually align my session uh, accordingly. Yeah. Can you please just confirm? I mean, if you could just mention that why are you attending the webinar? The is it for updation or is it for something else? Can you just confirm, please? Uh, okay, Yapka, thank you for, and Sarah, thank you for your response. I think you people missed out my session and yesterday also. You could go onto the Vimeo and you could actually go through the session there. Basically, there is something that I would want to clarify and would want to help you people understand. Is basically the paper taxation Pakistan variant is not attempted by many in Pakistan. So what ACCA Pakistan, what they figured out was they figured out that the major reason for students not attempting this paper was the lack of resources. So in order to overcome this specific issue that the students face, they actually planned out that they are going to conduct this exam revision sessions for the paper F6 Pakistan variant. And as a result of this, I conducted the webinar in September. So let me actually guide you a bit. If you go to this website of ACCA and you search practice to pass, so if you search practice to pass on the ACCA website, you will find this section. And here you have got practice to pass, revision resources, and recorded webinars. You click on this, and then you click on this specific PDF file. When you'll click on this specific PDF file, on this PDF file on the fourth page, in fact, this is the page number 6 of this PDF file, you'll have this taxation Pakistan variant September 19, day 1, day 2, day 3, day 4, day 5 videos, and you'll have the handout links also. So like I conducted this specific webinar in September, and what I'm actually going to guide you is that specific webinar covered around 70% of the syllabus of, or in fact 65% of the syllabus of taxation. So the remaining 35 to 40% which is left, so I shall be covering in this specific webinar. So if any one of you who is attempting the paper in December 19 exams, the best thing for you to do is that I am teaching it in a manner so that you can have exam practice questions also, and I'm teaching in a manner so that you can have exam practice questions plus you have a revision of the whole syllabus. So you look at these 5 videos, and then I have actually conducted a video in yesterday's session also. So that video would also be uploaded on the ACCA Pakistan page on the Vimeo. If you could just look at the chat window, he's already mentioned there on the chat window that it's available on Vimeo.com. If I say Vimeo.com, you just go on to the ACCA Pakistan channel on the Vimeo.com, and when you go onto this ACCA Pakistan channel on the Vimeo, prepare to pass. In fact, I'm not able to find yesterday's video, but I'm unable to find, in fact, last 7 days, last 24 hours. If you just click on this, last 74 hour, prepare to pass. Sort by duration. In fact, I'll just mention here ACCA prepare to pass. And if I say well, in fact, you would probably get it through the email, but let me continue. So these are the 5 videos from the September session, and you'll have a video which is basically I conducted the session yesterday. So that video has already been uploaded on the ACCA Pakistan's channel. So you could actually access it from there also. And then what can happen is once, in fact, if you attend all of these, if you attend all of these lectures, then what is probably going to happen is you will be able to inshallah cover the entire syllabus of this taxation. And also I've shared a WhatsApp group, so you will have a link of WhatsApp group, and what you could do is that probably um, here it is. Here it is. This is the video, ACCA Pakistan channel. This is the video, ACCA Exam Approach Webinar, December 2019. And this is the session that I conducted yesterday. So I actually went through the sales tax introduction. Um, so you could go through it and you can have an idea. So I hope that this actually clarifies that how to prepare further. You can ask me questions in the WhatsApp group that the link of which is shared in the chat window. You can join using that link and be part of the group. So is that fine to you people now? You have any further questions, please? Yeah, both Yapka and Sarah, can you just confirm? And other students, can you confirm if that is fine or you have any further queries, please? Okay, I think in this webinar you can find a chat window, and in the chat window there is actually a message from the ACCA Global Organizer where he has mentioned a WhatsApp group link. You could just explore the chat window and you will find it. Thank you very much for your appreciation. Thank you very much. Okay, now let's move forward. And now what I'm actually going to do is that you have the handout with you people. What I'm going to do is that I'll be attempting one of the questions, and that is from the local qualification similar type of paper to the F6 taxation. So this is basically one of the questions that I shall be attempting, and let's have a discussion about it. So what I would want you people to do is to go through this question. The requirement of the question is, in the light of provisions of Sales Tax Act and rules made thereunder, compute amount of sales tax payable or refundable to each of the above registered person and input tax to be carried forward. So just go through the questions. I am going to start discussing in 5 minutes time. Okay, let's talk. um, if I talk about this question, it says the following information has been extracted from the records of 4 registered persons. For the month of February 2019, registered person A, registered person B, registered person C, and registered person D. It says the taxable supplies from registered persons, A 1.5 million, from B 1.5 million. Taxable supplies from unregistered person, taxable supplies from unregistered person, this fixed asset from a registered supplier. It says taxable supplies to registered person, exempt supplies to registered person, taxable supplies to unregistered. All above figures are exclusive of sales tax. It says in light of provision of Sales Tax Act 1990 and rules made thereunder, compute amount of sales tax payable to each of the above registered person and input tax to be carried forward. So basically we need to perform calculation for 4 of these people: registered person A and registered person B, C and D. Now let's try to have a discussion. First of all, this is a question which is, okay, let's talk about this specific question, um, which is basically a question from a local qualification. And this is a February 19 question for registered persons. So this is what we have. Now, what exactly are we being told in this specific thing? First of all, we are being told that let's talk about registered person A. If I talk about person A, so I'm first of all perform the calculation of registered person A. Now, registered person A, what happens is it's a taxable supplies from registered person 1.5 million. So the purchases are 1.5 million. They are priced at 17%. And what happens is if they are actually of 17%, now the next thing is going to be like this. So the total input tax turns out to be 255,000. Then it says supplies to registered person is basically of 1.2 million. Further, it says exempt supplies. So when we say exempt supplies, that's of 300,000. And there's going to be no tax applicable on the exempt supply. Then it says taxable supplies to unregistered person. And then lastly, zero rated supplies. So it's about zero rated supplies. And how much is that? It's 300,000. So it's ultimately 255,000 is the total output tax. So if you look at this, we have 1.5 million, which was basically majorly the only input. So we put that. Then there was this output, the supply to registered person, supply exempt supply to registered person, and zero rated supply. So we put in all these things, and resultingly this is how it is. If we talk about it, so the output tax is 255,000. The input tax is 255, but the adjustable input tax is the lower of 90% of the output or the actual input. So basically what happens is 90% of the output is going to be adjusted, and resultingly 25,500 is going to be the tax payable. And there is going to be a tax carried forward also. There's going to be a tax carried forward also. Now, how much is that amount of the tax that is going to be carried forward? So basically we paid an input of 255 and only 229,500 was allowed to be claimed. So the tax is going to be carried forward, which is the unadjusted tax of 25,500 is going to be carried forward. So we'll pay 25,500 to the government this year, and we will have this amount being carried forward as 25,500. So we were required to perform calculation for registered person A, and we did the calculation for registered person A. Is that fine to everyone? Is that okay to everybody? Okay, let's move forward and let's talk a bit further. Now let's talk about registered person B. So what I'm going to do is that I'm just going to copy this whole calculation for registered person B. Um, I'm going to copy this whole calculation for registered person B. Okay, now let's talk about the registered person B, that how are things going to move with respect to registered person B. Let's try to understand. When we talk about this registered person B, so for with respect to registered person B, the first thing is there is actually an input of 1.5. So we mentioned in here. Then it says zero rated supply of 1.8 million. In fact, I think I've made some mistake. It's 0% here, and it's going to be like this. Sorry, I made a mistake. I had to put in 0%, but I could not put in 0%. Now let's move a bit forward. Let's talk about the registered person B. So if I talk about the registered person B, how are things going to operate? With respect to the registered person B, let's try to understand that. Okay, let's talk about this registered person B. So now when we talk about this registered person B, the purchases is again 1.5 million, and this was at 17%. And then they have got zero rated supplies, and then that is only 1.8 million. So now basically this is all going to be deleted here, and it's just going to be 0%, 1.8 million. So resultingly this is all 0%. And if we talk about it, what is actually going to happen? What is actually going to happen is you will have this sales tax refundable of 255,000 pertaining to zero rated. You'll have sales tax refundable of 255,000 pertaining to zero rated. Is that okay with everybody? Are you people fine with this calculation? Yeah, anyone has any questions pertaining to it, please? Okay, now let's talk about, okay, there is actually a message for all of you. attending the session from the management that while you actually depart from the webinar, you are being given a feedback window. So we would appreciate if you could just fill in the feedback. Um, that is, if you could just fill in the feedback form so that we could have a good idea. Yapka, you're asking that the minor spelling mistakes forgone by the examiner, like especially when the column info is not correction, non-calculation. Yeah, obviously it's not English language paper. It's a paper for the taxation, and what they want to know is your taxation knowledge and how you are able to demonstrate it. Even if you make a mistake and that mistake is carried forward, you even get marks for that. The reason behind that is uh, even if you make a mistake and that mistake is unfortunately carried forward to multiple things, like if you make a mistake in input tax, that mistake would actually be carried forward to the output tax working, also the sales tax, all the sales tax liability also. So what the examiner they do is that they allow you credit with respect to it, so you don't have to worry about it, like you'll make minor mistakes. So minor mistakes are all admissible, are all forgiven by the examiner. Okay, now let's move a bit forward and let's try to discuss further. So the next thing that we need to talk about, is registered person C. So what do we need to talk about? We need to talk about registered person C. Now what is happening with respect to the registered person C? Let's try to understand. For the registered person C, we have got the taxable supplies from unregistered person. So purchases from unregistered person. So what is going to happen is you will not be charged input tax. No input is chargeable by unregistered person. So no input is chargeable by unregistered person. Now what happens next is we have got supplies to registered person, and that is basically 1 million. So it's going to be 17%. And then we've got supplies which are made to unregistered person of 800,000. So if the supplies are made to unregistered persons of 800,000, again it's going to be 17%. But then you'll have a further tax on it of 3% also. So that would make it 24,000. Now, so we've got 170 plus 136 plus 24. So this is how this is all going to be. Now what happens is the output tax is 306,000. The output tax is 306,000. Do we have any other purchases? No, apparently no. And the input tax is 0. The further tax is added up. So basically what happens is 330,000 is the sales tax payable. Is it fine to everyone? Okay. Lastly, we are left with the registered person D. Whom are we left with? We are left with registered person D. Now, if I talk about the registered person D, let's talk and let's discuss. The registered person D, um, it says taxable supplies from unregistered person 1.5 million. So 1.5 million is from the unregistered person. Next, it says the fixed assets of 2.5 million. So we have fixed assets of 2.5 million. So basically, it's going to be 17%. It's going to be 17%. So resultingly, this is what it is going to be. This multiplied by this. This is for the fixed assets input. And then what do we have? The supplies that we make is supplies to registered person 1 million. Then there is this exempt supplies. There is this exempt supplies 800,000, and there's going to be no tax in it. This is 170,000. Now what is going to happen now? You need to understand. Basically, there is a rule, there is a law which needs to be understood, and that law is that the 90% adjustment rule is not applicable to fixed assets. 90% adjustment rule is not applicable to fixed assets. Now let's try to understand what is going to happen with this registered person. We have got total input tax, which is 425,000. What am I going to do now? I'm going to say that now what next is there? The input tax is 425,000. Now what we are going to do is that less input tax pertaining to exempt supplies. So what is going to happen with respect to the exempt supplies? It's going to be the total supplies are worth how much? The total supplies are worth 1.8 million. So what are we going to do? We are going to say 800 out of 1.8 million multiply by the input tax value. So if it is going to be multiplied with input tax value, so we are going to say this is 800,000 divided by 1.8 million, and then it's going to be multiplied with 400,000, 25,000, so 1889. So what is going to happen is we'll have the adjustable input tax. What are we going to have? We will have adjustable input tax. Because not every input tax is adjustable. The input tax which was pertaining to this exempt supply, this would actually be lost. Why? Because if the supplies that are made are exempt, that means the input on it cannot be claimed. So if the supplies made are exempt and the input on it cannot be claimed, so this is how we are going to treat it. So anyways, resultingly, what is actually going to happen is you've got supplies to registered person of this is this. Then the exempt supplies are this. The zero rated are going to be treated like this. And when we go about with the calculations, so let's try to understand this thing that 90% output is not applicable in this specific case. The reason behind that is it's all pertaining to the fixed asset. So the balance tax payable is going to be 66,111. 66,111. Is it fine to everyone? Is it fine to everyone? It's just the application of the various rules that we have studied and discussed till now. Yeah, anyone has any questions, please do ask. Okay, so we actually have attempted this specific question where we have talked about the various aspects. What I'm actually going to do is that I'm going to save this specific file also, where the various sales tax rules are being mentioned, and this can be shared with you people by our administrative team, so that you could benefit from them. Anyways, we now need to go back to another aspect, which is basically the important definitions. So I think and I hope that everyone has this handout. Just in case if you don't have the handout, I'm going to have it attached to the handout window. Just wait for a second and I'm going to get it attached. Okay, so we have now got it placed in the handout section. So while accessing your webinar window, what you could do is that you could actually access this file called the important definitions from your handout section. Okay, anyways, so we had discussed a few definitions yesterday. And when we talk about the concept of sales tax, you need to actually know the various definitions, because the various definitions are actually applicable, and it's important to understand them if you want to apply the sales tax concept. Now let's actually talk about that. What exactly do you mean by manufacturer? Because we have discussed the definition of supply, we have discussed taxable goods. We are now going to discuss manufacturer or producer. Now, before I talk about manufacturer or producer, I'm going to say that let's talk about the definition of manufacture or produce first. Now, the first thing that you need to understand is whenever you are reading a law, there are actually two types of definition. One of them is called inclusive definition, and the other one of them is called exclusive definition. Now, what is this inclusive definition and what is this exclusive definition? So the inclusive definition actually means that whatever that is mentioned here is included in addition to what is mentioned in the dictionary. So like if the word manufacture or produce has a dictionary meaning, that dictionary meaning is applicable in addition to this. The other meaning that is applicable is the meaning which is mentioned here. So it says manufacture or produce includes any process in which an article singly or in combination with other articles, materials, components is either converted into another distinct article. So that's the definition of manufacture. That what exactly do you mean by manufacture? Now, why is this definition important? The reason behind that is, so that's converting into another article. Furthermore, it says our product or is so changed, transformed or reshaped that it becomes capable of being put to a use differently or distinctly, and includes any process incidental or ancillary to the completion of manufactured product. Like for example, at times what happens is there are companies which only engage into the activities of polishing the manufactured product. So if somebody is engaged in polishing a manufactured product, that is also going to be considered as manufacturing. And furthermore, whatever process through which you lead to a situation where you change the original condition of the article, that means you are in the business of manufacturing. Now let's move a bit forward and let's try to discuss further. Process of printing, publishing, lithography, and engraving, that is also considered as manufacturing or production. So why is this definition important? Because there are different set of rules for the manufacturer. Because there are different sets of rules for the manufacturers. That's why it's important. Now, okay. Now the process and operation of assembling, mixing, cutting, diluting, bottling, packaging, repackaging, or preparation of goods in any manner. Okay, let's move a bit forward. So that's the definition of manufacturer. Now, what's the next definition? The retailer. Well, we do know the definition of retailer, but let's do understand, because it means a person supplying goods to general public for the purpose of consumption. That's a very important point. If you open a store and that store is actually selling goods to the people who actually use it for manufacturing, that means you may not be considered as a retailer. It says that provided any person who combines the business of import and retail or manufacture or production with retail shall notify and advertise wholesale prices and retail prices separately and declare the address of retail outlets. So it's important that you need to tell that whether you are selling it to the manufacturers or whether you're selling the items to the consumers. If you are doing it to the consumer, that means you are a retailer, otherwise you're not a retailer. Now the next definition is the retail price definition. If you could remember from the yesterday's session, that I did talk about that there is also a category of supply which is called third schedule item. Now, what is this third schedule item? So when I talk about the concept of the third schedule item, so third schedule item actually means that this actually refers to the goods on which sales tax is charged by the government at to the manufacturer on the ultimate retail price. The sales tax is charged by the government on the ultimate retail price. So that is what is considered to be a third schedule item. Now, so there is a concept of definition of retail price. What does it say? It says with reference to third schedule. With reference to what? Third schedule means the price fixed by the manufacturer, inclusive of all duties, charges, and taxes at which any particular brand or a variety of any article should be sold to general body of consumers. So whatever the price at which an item which is generally available is being sold, it's called a third schedule item. Now what next is there? Furthermore, it says if more than one such price is so fixed for the same brand, the highest of such price. Yesterday, we had a student who was asking a question that when we go to the hotels and restaurants, and what they do is that they charge a higher price. Now, if those restaurants they charge a higher price, so what does that actually mean? That actually means that those restaurants are charging a price which is higher than the price originally set by the manufacturer. So if it is the price which is originally set by the manufacturer, and if it is a higher price, then that higher price is going to be the price on which the sales tax will be applicable. So that is how it is going to be. Now, the next definition is of distributors. Now, what is a distributor? He says a person appointed by a manufacturer or an importer or any other person for a specified area to purchase goods from him. For further supply, and includes a person who, in addition to being a distributor, is also engaged in the supply of the wholesaler or retailer. Now, why are we studying these definitions and why are they important? So, you need to understand this, because what happens is we will be discussing that who is required to be registered for sales tax. So when we discuss that who is required to be registered for sales tax, so you need to know the definitions of these various items, because the law would say that every distributor is required to be registered, every wholesaler is required to be registered. Now, who is a wholesaler in respect of the law, in respect of the Sales Tax Act? We discussed the value of supply in the yesterday's session. Now, there is another concept which is called open market price. Now, what is this open market price? Because this terminology of open market price is repeatedly mentioned here and there. So the open market price, what does it mean? It says open market price means the consideration in money which a supply or a similar supply. Now, what's a similar supply? I'm just going to talk. Would generally fetch in an open market. So generally the price which is prevalent in the market is called open market price. Generally the price which is prevalent in the market is called open market price. Now, what next is it? It says definition of similar supply. Now, what is similar supply? Let's try to understand. Now, when we talk about the similar supply, at times what happens is it becomes difficult for you to identify. It becomes a bit difficult to you to identify whether, the open market price of a supply is available or not. So what you do is that you try to identify a similar type of item trading in the market. That similar type of item is considered to be similar supply. It says in relation to open market price of good means any other supply of the goods which closely or substantially resembles the characteristic quantity, components, and materials of the aforementioned goods. So that is also going to be considered as similar supply. Now, Okay, let's move forward. So the similar supply, the time of supply definition is already done. So basically, this is a few important definitions that we have done. Now, what I am actually going to do in the tomorrow's session is I will inshallah be covering the other aspects of the syllabus. Just to give you a quick review of what is there in the syllabus. So let me actually go through the syllabus with you people a bit so that you can have an idea that what exactly are we trying to achieve. So we are actually covering this specific section, which is of sales tax. There was this concept that described the scope of sales tax on supply of goods we've discussed. The principal goods chargeable to sales tax on retail price basis. So the third schedule item, distinguish between general sales tax and retail sales tax, exempt and zero rated. List the principal, zero rated and exempt supply. It says the principal goods chargeable to sales tax at reduced rate under 8 schedule. We'll cover it up. The second thing is it's the registration and deregistration requirements. We're going to cover it up in tomorrow's session. Then it says computation of sales tax liability. So we have done this. The computation of sales tax liability. Also, the sales tax refund and representation. So we are, inshallah, going to be covering this subsection 2 and subsection 4 in tomorrow's session, hopefully. And then we can actually move forward, and then we will discuss about withholding tax in the upcoming sessions. So if anyone has got any questions, any queries, any problems, anything that you would want to know, or any comment, any feedback that you would want to give, I'm open to it. Please do share and do let me know here. It would be highly appreciable. Yeah, anyone has any questions, anything that you would want to know, anything that you would want to comment upon, please do let me know so that we could actually respond to you accordingly. Okay, thank you very much for your time, and thank you very much for your comments and feedbacks. It's highly appreciated, and I hope to, inshallah, come out with um, uh, the same comprehensive session tomorrow, where we shall be discussing about the registration requirements and so on with respect to the sales tax. That's what we are going to cover. So we're going to cover this specific whole section of sales tax. So thank you very much, everybody. Look forward to seeing you all tomorrow. Uh, uh, look forward to seeing you tomorrow, inshallah. Thank you very much for your time. Thank you.